Please ignore the double chin. I enjoyed my vacation in Hawaii a little bit too much, but I'm back. And so today we're talking about the FSD and collaboration with other automakers, auto manufacturers. We're talking about GM and Ford. Also several upgrades that analysts give Tesla. And Tesla is just going crazy right now. Also, we're talking about why Cathie Wood sold 98 million of her Tesla position. So stay tuned. So we're talking about the collaboration between Ford and GM, and maybe others will follow. Is the Tesla charging system the new norm? FSD and getting other EV makers to partner up, and a lot more. Welcome back to my channel where I give you the latest Tesla news. So Elon Musk goes full throttle and offers licensing Tesla's autopilot technology to accelerate the EV market. In a significant acknowledgement of Tesla Inc., General Motors has just recently admitted that Tesla is the leader in the EV market. Elon stated that the company is willing to collaborate with other auto manufacturers to accelerate EV adoption. This is not the first time that Elon offered to share Tesla's technologies. Years back, Tesla took a radical step of making all of its patents freely available to the public. This move was intended to encourage competition in the EV space to speed up the transition to sustainable transport. Now Tesla is going one step further by opening up its supercharging network to other companies. Now, this could change the transformation of the EV charging infrastructure landscape significantly. Musk also mentioned of licensing autopilot and FSD technology, also a potential game changer in the industry. By making these technologies available to other companies, this could significantly influence the progress of autonomous driving. Making the change to electric can be unnerving, and Bank of America is so smart. They want to help us smooth into the transition for the US consumers. Why would anyone go electric, you might ask? Well, there are many reasons. EVs are cheaper to maintain and refuel than gasoline-powered cars. And with the new tax incentives, they might also be cheaper to buy. Environmental benefits could be another decision maker, just to name a few. Now, people are worried about EV range and charging or resale value and warranty. So, Bank of America recently launched a EV research center dedicating to help consumers to learn about and make informed decisions when buying a EV. You can find the answers to most questions on the Bank of America website. Bank of America sees a EV penetration as high as 25% by 2025, which could translate to 4 million EVs sold. American purchased almost 260,000 EVs in the first quarter of 2023. This would put EV penetration to about 7.5%. And now this is pretty awesome. Tesla just won the battle in steering the EV standards for its favor. Recently, Tesla and legacy automaker Ford shocked Wall Street by announcing a partnership that would let Ford consumers plug into Tesla's supercharging network. EVs aren't just a new technology, but they also need charging stations. Tesla has created its North American Charging Standards, NACS. Many of Tesla's competitors create different designs. The Combined Charging System, CCS, and deemed it to be the standards for the EV industry. However, Tesla sold more vehicles than competitors, plus Tesla's chargers are much faster and more advanced. Ford decided to partner up with Tesla when it comes to the charging network, and GM followed pursuit. Dan Ives, a Wedbush security analyst, sees Tesla selling access to its infrastructure and technology as an AWS moment. This is a potential pivotal moment for the EV industry. AWS, Amazon's Web Services, went from a risky bet to an enormous success. Ford CEO Jim Farley and GM CEO Mary Barra have made the call, Dan Ives said, and others will follow.
Yeah, I think what's happening, it's a sum of the parts. I'd almost call it an AWS moment, almost an Apple services moment for Tesla, because what's starting to happen now is that the 313 area code, after years of resisting, they recognize they need Tesla. And I think when you look at the supercharger perspective, from a revenue perspective, you go out 2025, GM Ford, they get 15% share. You're looking now an incremental $3 billion, $4 billion a year of revenue that was not there. And I think what's starting to happen right now for Tesla, from batteries to supercharger to storage, the sum of the parts thesis is now starting, I believe, in the early stages to play out with investors. That's really what's starting to happen now with the stock, in my opinion.
There is another theory that, yeah, he got them on the network and he got them on the technology, but that design, they have 100 years of refreshing designs with high frequency, and in the end, that's going to mean better unit sales for the legacies than perhaps the Teslas. What do you think? Yeah,
my view is that Musk needs GM and Ford actually be successful for the broader EV vision in terms of just adoption in the United States.
Move the adoption curve higher.
And it's the jobs thesis, in other words, like from Apple, and I think that's really what's starting to play. And that's why right now you're seeing Farley and Mary ultimately partner with Musk, because I believe this is just the first step. It's starting with superchargers. And ultimately, I think next step could be batteries technology. And I think that's the golden goose right now, is that they've built the castle, waiting for others to call. Farley called, Mary called. And I think it's just the start of what I view, especially with demand I view it stable in terms of, what we saw coming out of our Asia checks being in Asia the last few weeks. Margins, I think now are starting to trough out the next 1 to 2 quarters. And I think that's why investors right now are really starting to look at this in a different story.
More amazing news from China. After Elon Musk visited China, Tesla sold nearly 78,000 cars in its most important market last month, as the government looks to extend tax incentives on new vehicles. A short time later, the news said the China Passenger Association, or CPAC, said Tesla sold 677,695 cars in May, a 2.4% increase from the previous month and 142% higher than the same period last year. Now, China's EV sales could accelerate further into the summer month. Now, this is pretty awesome right here. According to Canaccord analyst George Canarikas, Tesla cutting prices would fall into the excitement category. Now, he wasn't talking about cutting prices of cars, he was talking about the FSD. The price adjustment to increase FSD adoption and incentivizes more Tesla owners to experience the current FSD beta. FSD is pricey. It's $15,000 or a subscription of $199 per month, or $99 per month if you pay $6,000 up front. Now, a lower price would get more people to buy in early. Once the masses truly appreciate FSD and what it is capable of, Tesla may see a ChatGPT moment. Canarikas said Tesla CEO Elon Musk believes the FSD product will achieve a level 4 autonomous driving capabilities, which means cars equipped with the technology will do most of the driving most of the time, no human required.
Gave a chat on Twitter Spaces a couple of weeks ago and basically alluded to the fact that the company is going to value unit over margins as we head into the cyclical downturn in autos. And so I think we're all waiting to see how bad the margins and the average selling prices could get next year. Well, we have confidence over the long term is that every time, and why we think the company prefers unit over margins, if you think about it, every time they sell a car, there's a $15,000 opportunity to add software to that vehicle. That's 30% gross margin in addition. And that $15,000 is autopilot. Right now, we assume they're at about a mid-teens penetration rate, but as that product gets better, as people feel more comfortable with it, we think there's a long-term opportunity to really enhance gross margins.
So that's one of the key reasons why you still have a $275 price target on the stock?
Yeah, well, that reason, and if you look at this company relative to others, I'm sort of a meat and potatoes kind of guy. This is about earnings and earnings growth. Even if you assume it's 20 or 30% earnings growth, we assume it's a little bit higher than that. We get to about $11 in non-GAAP earnings by 2025. And if you compare this to the other big cap tech companies, which we think Tesla should be comped to, it's incredibly attractive. I mean, this is trading at close to 10, 11 times earnings on 2025. That group, which includes Apple and Amazon and Nvidia and Meta, they trade about 17 times. So you're getting much better growth for a much better valuation. We think it screams relative to those companies.
So now, why did Cathie Wood sell so much of her Tesla position? She sold $98 million worth of Tesla stock. Now, Cathie Wood of ARK Invest is focused on disruptive technology stocks, especially those that use artificial intelligence. ARK made Tesla and UiPath its two largest holdings. Now, according to Musk, Tesla is one of the world's leading AI companies. And Cathie Wood and ARK Invest are betting on Tesla's capability to produce its ride-hailing network. Robotaxis could make up $4 trillion of Tesla's revenue in the future. So recently, ARK sold a large amount of Tesla shares at all-time highs. Now, we have to understand that investment firms do not have unlimited supply of money to purchase. They have to rebalance their portfolio and sometimes look for a better opportunity. And they still have a lot of Tesla. Investment firms will buy low and sell high, which everyone else should. Also, nobody knew that the Fed's decision that could have swayed the market either way. It may have been out of caution. So this week, Elon tweeted that Tesla aspires to be as helpful as possible to other car companies and is enabling other companies to use the Tesla supercharging network. Also, he added, happy to license the FSD Autopilot and other Tesla technologies. And of course, as the stock raises, it will be upgraded by analysts. It's always like this. KGI Securities upgraded Tesla to outperform from neutral with a $335 price target. Last week, Tesla's Model 3 sedan became eligible for full tax credits and revised criteria set by the Treasury. So here we go. Seems that everybody wants a Gigafactory. Pretty cool stuff. June 14th, French President Emmanuel Macron said he will meet with Tesla CEO Elon Musk on Friday. This will be the second time in just over a month. There are also talks with Spain and now Italy. When Macron was asked about if he was hoping to secure a Gigafactory, Macron said it's up to the company to look at different issues in Europe. France has been catching up with other European countries in its goal to become a hub for electric vehicle industries. Now, CEO Elon Musk also met with Italian Prime Minister Giorgia Meloni. According to the Prime Minister, it was a very fruitful meeting where they discussed innovation, opportunities, and risk of artificial intelligence, European market rules, and birth rates forward towards the future challenges that unite us. Also, Elon met with Italian Deputy Premier and Foreign Minister Antonio Tajani in Rome on Thursday. So I'm completely honest. Italian people are really warm people. I loved the interaction that Elon had with the Prime Minister. It was very warm. And I wonder if the next Tesla factories will be built in Italy. That would not surprise me. And I'm only saying this because I'm half German and half Italian. But anyway, I hope you like this video. Give me a thumbs up, subscribe. I'll see you next time. Goodbye.
Obviously, in all seriousness, look, Giorgia Meloni is wanting to continue Italy's trajectory and recovery as one of the G7 countries. And manufacturing is a big part of the Italian economy. It's one that has suffered hugely over the last few years with international competition, particularly from cheap imports from Asia. And getting cars manufactured in Italy, I mean, let's face it, Italians have expertise in manufacturing cars. I mean, we manufacture the best cars in the world. So it makes sense to me. And again, a win for Italians and a win for the Italian economy.